Hello there, and welcome back to our weekly market insight series brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. Let's get to it. Treasuries and stocks wavered throughout the week as investors monitored the latest developments between the U.S. and China on the trade front. Recently, escalating tensions have added volatility to markets, leaving investors to anxiously await any progress on a potential trade deal. It was a week loaded with employment data, which suggested a cooling labor market. These details have led traders to anticipate a rate cut from the Federal Reserve in September rather than October, while also expecting another interest rate reduction before the end of the year. The U.S. trade deficit narrowed more than economists expected in April. On Thursday, the Commerce Department announced that the trade deficit narrowed to $61.6 billion in April from a revised $138.3 billion in March. The significantly smaller trade deficit came as the value of imports declined by a record 16.3% to $351 billion in April, while exports increased by 3% to $289.4 billion. ISM's manufacturing index revealed further contraction in the manufacturing sector in May. The PMI edged down 0.2 points last month to 48.5. It marks consecutive months with a reading below 50, remaining in contraction territory. New orders and productions ticked up modestly, but remained deeply negative at 47.6 and 45.4, respectively. Meanwhile, the imports gauge reached a 16-year low after dropping by 7.2 points to 39.9 as firms pulled back in the face of higher tariffs. According to the U.S. Census Bureau, construction spending dropped by 0.4% in April compared to March, marking the third consecutive monthly decline. Compared to a year ago, spending was down 0.5%. Monthly non-residential construction spending fell 0.1%, while residential spending declined 0.9% during the month. Factory orders fell more than expected in April, marking a significant swing from the previous month's growth. New orders for manufactured goods declined by 3.7% to $594.6 billion during the month. The downturn came after orders soared by 3.4% in March as buyers ramped up purchases in anticipation of new tariffs. Shipments decreased by 0.3% and unfilled orders were mostly unchanged, while inventories grew for the seventh consecutive month, reaching $586.8 billion. Despite lower mortgage rates, MBA mortgage applications dropped for the third consecutive week after falling by 3.9% during the week ending May 30th. Both purchase and refinance activity decreased by 4% week over week. Still, both segments posted gains compared to the same week last year as refinances were up by 42%, while purchase contracts advanced by 18%. This week's results included an adjustment for the Memorial Day holiday. Job openings unexpectedly increased in April. The Bureau of Labor Statistics JOLTS report revealed that available positions increased to 7.4 million from a revised 7.2 million in March, blowing past the 7.1 million consensus forecast. Hiring rose by 169,000 to 5.6 million, while layoffs rose by 196,000 to 1.8 million. The quits rate fell to 2%, with the number of quits dropping by 150,000 to 3.2 million. The ADP National Employment Report showed that hiring in the U.S. decelerated in May to the lowest level since March 2023, a sign that the labor market may be weakening amid growth economic uncertainty. Private payrolls increased by just 37,000 for the month, down from the downwardly revised 60,000 in April and below the consensus forecast of 110,000. That marked the second month in a row when the figures from ADP were well below expectations. Professional and business services employment fell by 17,000, the first negative print since July last year. Education and health services shed jobs for the second consecutive month, while job gains also fell in trade, transportation, and utilities. Annual pay grew at a 4.5% rate for those remaining in their positions and 7% for job changers. Economists anticipate the labor market will show more signs of cooling in the coming months. Applications for U.S. unemployment benefits rose last week to their highest level since October. Initial jobless claims increased by 8,000 to 247,000 for the week ending May 31st. Analysts had forecast 237,000 new applications. It was the second week in a row with increased filings. Continuing claims, a proxy for the number of people receiving benefits, edged lower by 3,000 to 1.9 million, for the week ending on May 24th. Thursday, the European Central Bank announced a 25 basis point interest rate cut, lowering its key interest rate to 2%. The move had been largely priced into markets, with traders giving the quarter point cut a more than 90% probability of being implemented. The ECB lowered its inflation outlook on the back of a stronger euro and dwindling energy costs. And well, ladies and gents, that's it for the week. As always, stay locked in so you stay current on market news. Also, if you like this video, please hit the like button, share this video, and subscribe. Hit that notification bell so you know when we upload a new video. My hope is to always keep you in the know of the latest world news and, of course, our pricing incentives. Have a great weekend. Have an excellent day. Buffy out.